Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today I want to share with you the 7 ways a good credit score can benefit you. So let's dive in. The number one reason, and the reason that's most important to my heart being a mortgage loan officer, is applying for a home loan. So mortgage loans have a minimum credit score, and it doesn't matter how much money you have saved up in the bank. If you have a lousy credit score, you could be excluded from a conventional FHA, VA, those types of mortgage loans that offer the lowest interest rate available. And it really doesn't matter if you put 10% down or 50% down. If you have a 600 credit score versus a 740 credit score, that credit score is going to have the biggest impact, even a greater impact than your down payment when it comes to the interest rate for the mortgage loan that you're qualified for or that's offered to you. So keep that in mind. If a mortgage loan is important to you, the biggest impact on that interest rate when it comes to any particular loan type is your credit score. Number 2 is lower credit card interest rates. And here's why this is really important, especially this year. The Fed has already told us that the prime index rate is going to be raised at least 6 times over this year and next year. You guys, up until this year, the prime index rate hasn't been touched in a couple of years. So you have enjoyed really low APR on your credit cards in comparison to previous years and in comparison to what it's going to be. So the APR on your credit card is tied to the prime index rate. And if that's going to be increasing multiple times over the next couple of years, anticipate the APR on your credit card to also increase. So what does that mean to you? That means your payments might increase, but that definitely means that you're paying more in interest on any balance that you carry. And the last statistic that I read is the households that carry a credit card balance forward every single month, that average of that balance is $9,300 and some change. So if your APR goes up a couple of points, that could result in hundreds and hundreds of dollars more every single year getting paid to interest. And this is no joke. There's approximately $1 trillion in credit card balances in the US alone. 1 trillion. Next way a good credit score can benefit you is for business, personal, or even school loans. So if you are starting or expanding your business, if you want to take out a personal loan for something that you're looking to do in your life, or even finance an education loan, guess what all of those lenders, when you apply for that loan, do? That's right, they look at your credit score. And just keep in mind, your credit score is a calculation based on your ability to borrow money and pay it back on time. How do you manage your money? Your credit report is just a snapshot in time, and it shows your behaviors when it comes to money. But remember, a credit report does not reflect how much money you earn. It just shows how much of what's available to you are you using. How long have you had credit established? Are you making wise choices on your establishment of credit, your utilization of credit, and how long you've had credit extended to you? Did you know that many landlords and property managers pull your credit report if you're going to go rent a home? I have learned from some people that had such a low credit score that they were not able to qualify to rent at a particular community. So some property managers have a minimum threshold. And if your credit score falls below that threshold, you might be living with family, couch surfing, or renting from a private landlord that doesn't pull your credit. But in the past, you guys, I have rented from a private landlord and he pulled credit. The 5th way a good credit score can benefit you is lower insurance rates. Did you know that insurance companies pull your credit score and they have a rating system? And part of that rating system includes your credit score. So you can have a lower cost policy with a better interest rate when it comes to things like your auto insurance and your homeowner's insurance. The 6th way is utility companies and cell phones. Many people don't realize that cell phone companies will pull your credit report, especially if they are financing that phone purchase over time. They're acting as your creditor at that point, and so they want to know that you are responsible in repaying your debt. I cannot tell you how many times I have pulled a credit report for somebody who's applying for a mortgage, and they owe to this cell phone company and that cell phone company, and one more, another cell phone company. And oftentimes it's not just a couple $100. I've seen it be a couple $1,000. And utility companies will pull your credit as well. Although it is a soft inquiry, so it won't hurt you as far as a hard inquiry or a hard credit pull, they do tap into your credit to determine what kind of deposit they're going to charge to you. And unfortunately, I've heard of families that had to pay $1,000 security deposit to a utility company because they had lousy credit scores. And the seventh way a great credit score can benefit you is through your potential employment. That's right, employers often pull your credit report. So what does your credit history say about you? And are you comfortable with your future employer seeing how you manage your money behaviors? And a large percentage of U.S. employers will pull credit. There are so many reasons why a good credit score can benefit you, but the overall theme of all of these reasons is that it will save you money. If you're paying less in interest charges, you can have more money going into your savings. You can pay yourself first. Imagine if you have a really lousy credit score, you might be paying in the teens for an auto loan, and you're definitely paying in the high 20s for a credit card APR. But if you have a really exceptional credit score, you could be paying in the low teens for an APR and, oh my gosh, probably 4, 5, 6% on an auto loan. That could change what your payment is every single month and how much you're paying into interest by hundreds, if not thousands of dollars over time. And that's money that's getting paid to the people who loan you money, where you should be paying yourself that money to go towards your savings goals, the retirement goals, so you can finish well. I also saw that there was a study that showed consumers, we're all consumers with good credit scores often have a higher net worth than those with low credit scores. And that's because you can afford to finance those things that you can ultimately pay off if you're borrowing against it, like a car or a home. And then that adds to your net worth. Your net worth is your assets minus the things that you owe for those assets, any loans against it. But if you're buried in really high interest, by the time you even start making a dent on, say, that car loan, it might be time to trade in that car because everything's starting to fall apart on it and it's costing you more money. I hope you found this information helpful. If we haven't already connected on social media, please do. Find me at Credit Christy on Instagram, Facebook, and YouTube, where I have a lot of really great videos that cover all sorts of subjects that help you with money, credit, and mindset. Thanks so much for being with me again. And until next time, my friends, stay well.